back again with another video today, and today is Sunday. I need to look at the chart against next week, against Monday, then throughout the new week. So currently, market is still ranging, like I said in my previous videos, and like I have on my screen right now, I had this trend line taken out some days back. Then that was about 2 weeks ago. This trend line was taken out about 2 weeks ago, and it has been retested last week Monday, and that shows the market is trying to go bullish, and ever since then we are still in a ranging market. I'm still anticipating for that breakout, because after a long range of this kind what usually follow this kind of movement is either a breakout to the downside or a breakout to the upside of the market. So we should be expecting any of that to happen in the following week, or in 2 weeks time to this time. So I can't say precisely. So we should be looking out for that kind of movement, either price break above this structure, because this H4 structure has been a very strong structure. It has been a very contributing factor to this whole range that is happening here. You can see we have it strong enough to hold price for so many weeks. So likewise, this daily structure down here too, that has been holding price too. That is where we are having this whole range, and as you can see from the higher time frame, daily structure is still holding the price very well. So either we have the price breaking below it or breaking this H4 structure to target this level here, or this day one structure here, the daily structure here. Currently now, for this new week, all what I'll be looking out for majorly is to follow the market trend. So the whole trend here is like market getting to this daily structure here. I'm trying to consolidate, and it's gathering momentum. The momentum, we don't know where it's going to head to. Is it going to break this daily structure, or is it going to continue the bullish movement? Moving down to 4 hour again, let's see what is happening on 4 hour. On Thursday, we had this push on Thursday. What I'll be looking out for this coming week is to sell this market into this daily structure, then look at how price reacts within this particular level. Then we'll be looking for trading opportunity to any side of the market, because we don't know where exactly the market is heading to right now. For the past 3 weeks now, we'll be in this range, and we should be very careful about what the market is going to do. We'll wait and we'll react to what the market is saying. Be in the move when this breakout is happening, or when the breakout is happening towards this place, because that is going to be a massive movement. Because once you have that kind of movement, something is about to happen, very huge thing is about to happen. That means market is taking side. Once this kind of thing up, let's see in the past, look at how this whole market ranged from here, and see the breakout. You can see the breakout is always very massive. You should have nothing less than 200 pips on the breakout. You can see this, even you can see this almost 600 pips movement. So that's what I'm talking about, the breakout of a range, especially when we're talking about gold movement. When gold ranges, the breakout is always very massive. Look at this, and look at the breakout. Look at the breakout. This is more than 1,000 pips, 1,003, 1,004, 5 pips. So the breakout is always very massive when we leave a particular ranging market. Let's go back in time to see after price get to this structure here. You see what the market did. My price ranged within that particular point. So seeing the breakout, what happened? Price pulled down into this daily structure again. So that's exactly what gold used to do. After ranging for some times, the breakout is always very massive. Look at the whole range that we had here. Look at the whole range that we had here, and look at the breakout. Boom, you can see. So the breakout is always very massive. That's why whenever you are trading a range market, you should always be very watchful of the breakouts, and follow the market as the market breaks from that particular range. So that is the only thing that I'm expecting right now from this market, for me to see the reaction of price within this range. Is it going to close? Is it going to break to the upside, or is it going to break to this downside? Then I follow the market to the direction it's heading to. And how will you be able to be in a trade when that kind of thing is happening is for you to trade wisely within the range. Now this is the range that I've been trading for the past 3 weeks right now. I've been trading within this range for the past 3 weeks, and what have I been doing? I've been buying and selling within this range. And the only thing that I used to take out profit is to see reaction to some particular zone, particular strong levels, some important levels that you are looking out to, that you are looking up to, will be taken out. That is it. Now let's see. Let me show an example of what I'm talking about here. Seeing this whole range, let's say as we're trading within this range, we had this range here. So let's say market pulling down to this point. We know the only point we should be looking at for price reaction is this particular level here, this particular demand level here. This particular demand level here will be the only point at which we'll be looking at for price reaction there. So if I have this demand level, as my point of interest. Now let me go back to 15 to 30 minutes time frame and see price reaction within that particular level. Now look at what the price is doing. When price gets to that place, it started ranging. I'll be looking out for, okay, what is going to be the massive movement that's going to happen here. If this level is taken out, if this demand level is taken out, that means that's the break of that range. That is the break of that range. But look at what the market did at that particular point in time. You can see price get here and give us some kind of demand level again within the demand level of the H4. So this is another thing that we tell you, okay, I think this level is still going to hold, it's not going to fail out. But if this should fail out, should be looking out for the massive breakout of that particular range. So that is how to interpret. That's the way I interpret the market, to know when exactly those kind of breakouts is going to happen, and to know exactly if the breakout is not yet to occur. We still have some kind of time, some kind of time to spend in the market before that particular breakout of range happens. But currently, as you can see right now, this alone will tell you this particular level from the H4 is still holding the price, not to close, not to break out the whole structure of the daily time frame. So that is how I interpret the market, to know when exactly those kind of range is going to happen, those kind of range breakout is going to happen. The only thing that will show if this range is about to happen now is for me to see this demand level and this supply level taken out. Let me show that. For me to see this demand level and this supply level taken out. So if these two levels are taken out, I know the market is going to give us the breakout of this whole range. So looking at price from this point of view is going to be a very, very massive confluence for me to know the direction of the market, to know where the market is trying to bust out to. So I'm going to leave these two levels here. Let me put it as a point of interest, or I put it as H4 OB, order block. I use that as order block, H4 order block. So looking at this, I know when price gets to this point, I should be looking for reaction of the price at that particular level. So if this is taken out, or if this is taken out, I know where the market is heading to. If this is taken out, I know the market is coming to this level. And if this down one is taken out, I know where the market is also heading to. If this is taken out, I know the market is heading to this point. That is exactly the way I interpret the market. And if you look back in time, do your back testing, you will see the effect of levels being taken out. Once the one level is taken out, the next is to target the nearest and the most visible levels that price is going to react to, and that level has been reacted to several times in the past. So that's currently what I'm seeing in the market right now. By Monday morning, I'll look at the opportunity that we have in the market to trade the market to this level, to this supply level here, or to this demand level here. So that is the 2 point I'll be looking. If the market is going bearish, I'll be looking to get here with it, and if it's going bullish, I'll be looking to get here with the market. So it's just for me to follow what the market is doing, nothing more, nothing less. Follow the trend, follow the price movement. Don't try to force anything. It's not even possible for you to force. I keep repeating this in my videos. You can't force the market. The only thing you can do is just for you to wait, anticipate the movement, then you wait patiently for price to get to where you are expecting it to get to. Then you join the movement as the market moves. market still continue the range within the 2H4 structure. The range still continues. So what's the last thing, if I could remember very well, the last thing I was talking about in the previously was price making it to this H4 OB, and this one down here. The price was on this candle, if I could remember very well, around this level when I was making the last video. So I was expecting to sell this market to this point or to buy it to this H4 OB here, then look at price reaction within these OBs, then go along with it or go along with this one down up there. So that was what I was anticipating from the last video, and look at what happened exactly. What I was talking about happened, because after price getting to this point and this spike came into the H4 structure and closes with this huge rejection, and that was when I was looking into the market to go short. We're trading it down to this H4 OB, and look exactly what happened after that. Look at what happened after that. Let me go back to 15-minute time frame to see the trading opportunity that showcased in that particular point. And this was, let me bring up this section indicator. This was what really happened. The rejection was this, and look at what happened over the night then till the following morning, which was on Monday. After the rejection on the H4, look at the huge rejection on this H4 structure here. That was when I'll be looking at for selling opportunity, and the very first one I'll be looking at is this. So that will be the main focus. That will be the main focus. Though anything can happen before price gets into this point of interest up here, anything can still happen. I have some point of interest that I was focusing on before price made it to this point. So this one was one of it, because it broke this structure here. Look at this structure here. Price broke this structure and yet to fill up this whole impulse movement, this whole imbalance in the market. So that was what I was trying to look for on that Monday morning. That was the first thing I was looking at on that Monday morning. I took this trade actually. This hits my stop loss actually, though I entered the trade after this candle here, this bearish candle here, and I put my stop loss at this eye here. Then I target this point. I think I target 100 pips actually. 100 pips actually. That was what I target on that trade. So that was the first loss I had on Monday. Price hit me out on stop loss because of the break of this. Price nullified this point of interest. That was the first trade I took on Monday, and that was a loss. So I was looking at other point of interest that price has yet to fill. Look at this. I have this one here too. So I didn't lose this one. I was stopped out on break even, because this first one, after losing this first one, I was very careful on the second trade. So I put the second trade on break even after seeing the push down before this whole rejection happened, before the price now zoom off to the upside. So I entered this, I pull on this trade. I entered this trade. That's not what I want to do. I entered this trade after seeing this rejection here, this rejection, then followed by this red candle, and I put my stop loss above it a little, above that point of interest a little bit. I think around 25 pips. That I could remember very well. I was around 25 pips. That was what I set that trade to, and I quickly locked this profit. I broke even on this green candle here, because after seeing this rejection here and I saw this rejection, I quickly put this trade on break even, because after seeing rejection, there's high tendency price is going to like obey that particular level that rejection is taking place. So I put that trade on break even. I was hit out on break even with this candle here. This candle here, that was what hit me out on break even. This candle here, that was the outcome of the first two trades I took this week. So the final place I was expecting price to make to for me to recover my losses back was this point here, because on a daily basis I risk nothing less than 0.5% on a single trade. So I risk 0.5% of my capital on a single trade, and for a day I must not lose more than 1.5% of my capital. So once I lose 1.5 of my capital in a day, I close my system up, and I'm done for the day. With this move now, I was able to recover the loss I made here. Though the loss I made there was not up to 0.5% of my account, it's not up to that, but I was able to recover the losses, and I was able to meet up with the target for the day, because my target for the day is 100 pips, and the highest I can go is 200. Once I enter 200 pips on gold, I put my trade on break even on 200 pips. So if the market moves in my favor again, that's fine. But once I have my 100, I break even on 100. Once I have my 200, I break even on 200. So that's the way I trade gold, because gold moves in a very, very spontaneous manner. When price made it to this point, I was looking at the best price action that will call me into this trade. So I saw this whole rejection happening. I was like, okay, no problem. Let me just find a very, very, very good confirmation that this market is going to go down. So something I learned from these two trades was that the candle that called me in on this was not really a good candlestick pattern, because I had this huge bullish candle followed by this small body bearish candle. So that's not convincing enough. Let's assume after this bearish candle we had another bearish candle that engulfed this smaller body candle. That will be fine. But this smaller candle alone is not enough to call me on that trade, and that's the same mistake I made on the second entry too. So no clear confirmation, no clear call. So the very best thing for you is to wait for the clear call, and that's what I used to do. I was just being carried away with these two trades. So you look for the clear call. Candlestick pattern will tell you how market is losing momentum and changing direction. That is what price action will give you. Candlestick will let you know that kind of thing. And look at what happened here. Look at these 4, 2, 3 candlesticks. Look at this first one. Look at this 4 candlestick here. We can see the way the loss of momentum occurred on this candles. Look at this. This first one was a very huge one, followed by a smaller body, and look at how they reduce it until we have this whole range forming with this point, then price holding our point of interest. All what I was waiting for on this trade was to see a bearish candle that will engulf this whole movement here, and that was what really happened afterwards. You can see this candle here was the candlestick that called me in on this trade, and I went in on this trade and I was able to catch around I think 120, 130 thereabouts, because I closed this trade when the market was reacting to this daily level here. I closed this trade at this point because I was expecting price to react to this point. If price did not react to this level, it should react to this H4 OB, then we move down to this H4 structure down here. So those are the points I was expecting price to react to, and price reacted to this daily structure exactly, and that was when I was able to catch up around I think 130 pips there. But that was what I caught on this trade, and that was what I was able to recover. 25 pips lost here, I was able to recover that on this trade, so I got my 100 pips for the day. Then on Tuesday, I noticed something on Tuesday, because after price got to this daily structure, I moved to the H4 time frame to see how price closed on that daily structure, and look at how price closed on it. It was a very, very, very massive movement. Where is that? Yes, I saw this rejection one, then two, I saw this bearish this bullish candle closing above the daily structure. That was what gave me the chance of, okay, the first thing I'll be looking for the following day is to go bullish. But if I go bullish, where will I be looking to stop that bullish movement? Because there's still high tendency for this price to sell, because I was looking for this H4 and this H4 here. So trading to this H4 and to this H4 here, that was what I had in my previous video, that I'm going to like trade to this particular point, then I will look for what the market is going to do at those supply and demand levels. Now, immediately after price got to this point, there was rejection, then there was a bullish candle closing above the level. So I knew this point is where I'll be looking for a buy opportunity. Then I was very conscious about this high here, that might be a potential place where price will turn around again to continue the bearish movement. So I was very conscious about that particular level. Then that is one. Then two, looking at it, I can call that level supply level. Can call it a supply level, because if you move down to 1 hour, you will see there was a break of structure at that particular point. Look at this. There was a break of structure at this point. So I can regard this candlestick here as a potential point of interest. I can call it OB. Let me just call it order block. You can see that was what I saw on this trade. Though I was able to enter a trade towards that particular point before I, where was that? I think I entered. Oh, I couldn't enter. Yes, I remember this. I missed out on this trade actually, because my setup failed to happen, because I was looking at entering this market when price make it back to this point, but look at what happened. That never happened on that day, on the Tuesday. Yes, on Tuesday. So the price moved to this H4, to this 1 hour order block, and look at what happened. Is that immediately price got to that place? There was a news on that I could remember. I don't trade news. Then what I do, I was able to catch up on this trade. I think I caught about 200 to 150 thereabouts on this trade. But how did I enter this trade? It was a very tricky trade, because there was a news around 130 thereabouts on that day. So what I did was, I let the news to play out before I pull in. I allowed the news to play out. So I was expecting price to take out the highs, the lows here. The lows, I was expecting price to take out all these lows around this OB here. And look at what happened. Price took out this and left this point of interest up there. So that was when I know, okay, I have to just wait. I have my setup already. But before I can do anything, let the news play its own role. Yeah, after the news, I came back to see this whole bunch of movement. Look at the massive movement that happened there. I wait for the news reaction, so I trade after the news. So what did I do exactly at this point? Look at the news. Boom, the next candle was a bearish candle, but didn't get back to my point of interest. So I was waiting for the exact candlestick that will get to my point of interest before I go in, and that was this green candle here. And look at how massively that rejected the point of interest. That was where I put in my entry there, and I was able to target my 50 pips stop loss and 200 pips take profit. That was the trade I took on Tuesday. After closing for this day, the very next thing I did was to go on the 4 hour candlestick to see how the market closed on that day. So one of the OB I was expecting price to get to, price made it to that point, and which was this one. I was very happy when this happened on that day, on the Tuesday. So on Tuesday night, I was very happy. So seeing a bullish candle forming that engulfed the previous one, you can see we have a small body candle that engulfed by this big candle. That gave me some kind of confidence that okay, tomorrow morning, the next day morning, which is Wednesday, I'm going to buy this market for sure. But where are we buying it to? If we look at this, we have an OB here, another block which is H4 order block. Yeah, that was a point I was looking at on Wednesday night. That on Thursday I'm going to buy this market to this H4 order block. Then from there I will sell again from that particular point to anywhere the market is going to lead me to. So that was how I was able to predict the movement and to know exact things to do when price gets to those particular points. Now, after seeing this engulfing candlestick, this bullish engulfing candlestick, I moved down to the 15-minute time frame on Thursday morning, and I was able to catch. I think I caught around around 100 pips thereabout. The very first thing that took me in on this trade was seeing this level being taken out. See, I saw this level being taken out. So actually, this eye here. Yes, I saw this level being taken out, and I look at the price to know where to put my point of interest, and I saw that is on this candlestick down here. That was the first thing I did on Thursday. But look at how the market now play. Look how the market played. Price stumbled into it actually. But looking at this on the 30-minute time frame, you will see that where is that? Yes, the whole B here gave more clearer picture of what the market is saying. That is why I keep using the 30-minute and the 15-minute time frame for my setup. I have to look at this if they are conforming. If I have huge gap within them, then I break the point of interest into two. But if I have my point of interest on 30 minutes closely in line with the one of the 15-minute time frame, I just use the 30-minute time frame to expand it, then leave it that way, then go back to 15 minutes for entry. So look at what happened here. So I entered this trade immediately, price left here and formed this doji candle here. This first one hits me out on break even because I was targeting around 120 pips thereabout on this trade, but unfortunately when the price gets to this point, it reacted to this level massively, then dropped after that. What I was actually expecting after this movement was price taking out this high, so I was expecting price to come down again to this OB here, and that was what happened there. But I didn't expect that to be so deep into this level to stop this trade out. I was just being conscious about this trade, so I put this one on break even, then I waited for this drop to happen. The second trade, I waited for this opportunity again, and I re-enter into the market on this bullish candle there. Then that was when I targeted my 120 pips again. I think I was now able to pick up 120 pips again because of the entry level here is higher than the one I had here. So I was able to just to go out of this trade with around 110 thereabout pips. That was what I did on Wednesday. On Thursday, not trade today, because after price got to this level, I was expecting a buy movement because it's too deep into this whole structure here. Price went too deep into whole structure here. Look at how this price later fall massively. So I was supposed to enter a trade here, but I saw this opportunity later on in the day that I missed the entry. Though I'm okay with what I had that day. I have already gotten my 100 pips for the day. So during I think late in the night when I opened the system, I was seeing the opportunity here. The price took out this level here, this structure here. Price took out this structure here. And this candle here should have been defined as the point of interest. Then I should have moved into this trade on this bearish candle. Though that played out very, very massive. I'm just trying to show how that played out, but though I didn't take the trade. And look at this, the 200 pips again movement. This was what happened from Monday to Wednesday. So today, which is Thursday, I was looking at the trade, making some kind of movement here, because I knew if H4 should close below this old stuff we have here, I bet you it's going to drop down. You are coming down to this point. But look at how massive the old stuff reacted. Let me go back to H4 and see that, to show that price reacted to that level massively. You can see when price got, let me clear off this. So when price got to this H4 structure, I was like, oh, I think it's time for this trade to just bounce off again and start going up. When this candlestick closed, this strong candlestick closed here, I was seeing this green candle showing red candle below this level. I was like, oh, I think this level is going to be taken out very, very soon. But to my surprise, when I got to open my laptop this afternoon, around 2 p.m. this afternoon, I was like, whoa, look at this huge movement here. So we had a very huge movement, and that was how the markets changed the whole movement again. You can see into a bullish movement. You can see this huge candle here close above the two levels, the H4 structure and the D1 structure. This made me look at the market in another way round, that is going to go bullish. So that will be all for now. All what I'll be looking for tomorrow, which is Friday, is to go long on this trade. Though anything can still happen on this trade actually, but let's just see how market will move. So what I'll be expecting tomorrow is for price to come down here. I have this point of interest here I'm looking out for. I have another one here. You have another one here, because this level is taken out already. That has been taken out already. So this is the first thing I'm expecting tomorrow morning. Let's see how this is going to play out. And if this doesn't come the way I'm expecting it, I will be looking at change of structure within this particular level, break of structure within this particular level. Then we'll move with the market. So that will be all for now. I'll be expecting price to move anywhere around tomorrow, just for me to go along with the movement. But these are the two levels that I'm currently seeing right now. This one down here and this one up here. These are the current level I'm seeing currently now, until price give me some other setup that I'll be looking at for against tomorrow. So that will be all for now.